Hey guys, welcome to another video brought to you by Total Control Traders. In today's video, ticker review, we have got a ton of tickers to go through. Basically, I'm just going to go through anything that's interesting, anything that's having a little bit of movement or is holding up well against the market, or just anything that's in the category of people's interest, as well as those tickers that are requested through our 24/7 chat room. Make sure you check out our website at totalcontroltraders.com. Alright, let's get right into it. First up, we got the Wall Street bet ones. GME. From what I'm seeing on GME, because of the daily being a little bit choppy, still going up and down, on the weekly it looks amazing. We have gone up 2,700%. And now that the trading has resumed, anticipate some sort of sideways action. Maybe even we could very well go higher. With the trading resumed and with the market dropping, things might be looking decent on GME. And that's why we go to the shorter timeline. Make sure you have some water ready. This video is going to be extra long, so not for the faint-hearted. Get your water ready. Alright, anyways, so 15 minutes on the GME, we can see that there has been a sideways wedge forming. This drop was mainly caused by the trading halt and restrictions that was put on by a lot of brokerages. We had basically gone from 480 to 103 within a matter of an hour and a half. Yeah, an hour and a half. That was a huge drop. 76% drop in 5 candles. Nope, an hour and 15 minutes. But from there, once the restrictions had been lifted, we can see that there were a bounce and another gap up on Friday. Some bear action, but towards the end of the day, we saw decent bull volume pushing it up right up to that resistance trend line. So GME is surprisingly strong. Personally, I still wouldn't be touching it just because I've seen too many of these pump and dumps, and I don't know if you can call this pump and dump. It is the first of its kind. The first type of the event is basically retail investors sticking it up to big banks, giving them the big middle finger and say, you know what, we want our money, kind of thing. It's a different story, and it could very well just keep on going. So I'm more than happy to just sit on the sideline, get my popcorn ready, just watch what's gonna go on here. It's gonna be one heck of a show. 2020 was the pandemic to be remembered. 2021 January, market extremely bullish. Now witnessing another event in the making that's going to be well remembered in history. So keep an eye on GME. It is a lot stronger than the typical pump and dump, so it's a little bit different. All right, you could draw a wedge a couple different ways. Either this way from the bottom trend line, or that way. I don't think it'll make too much of a difference as long as especially if we were to break this trend line coming Monday. If not, this is a 15-minute chart, so we are looking at shorter time frame. If we do break this lower trend line, and with the price action that this stock is providing, I imagine we'll break both of this, regardless of how you draw it. We'll break both of this in one single movement. All right, next, AMC. Same idea. We won't be reviewing the daily chart on any of these 5 tickers. the movement has just been a bit too volatile in the most recent days. So it doesn't, the daily reviews would not really provide you with any insights. So I'm going to be reviewing the shorter time frames. Similar idea, has a wedge forming, a little bit weaker than GME. Let's see, maybe there's a better way to draw this a little bit more clear. Yeah, there we go. That makes sense. Yeah, so we are in the wedge as well, a little bit more of a descending wedge versus GME, but it's still just sideways. Right now in the middle zone, no man's land, not ideal for trading. We can clearly see a volume slight decrease over the last few days, ever since the pop. And let's see how much we dropped on the restriction. 67%. So we didn't drop nearly as much on versus GME, but we didn't run nearly as much versus GME either. So watch for action on this wedge, 15-minute chart. Would expect a break, and the break should bring us some volatile movement considering the volume. Next, BlackBerry BB. Clearly weaker than previous two charts. Gonna have to, let's clean this chart up. All right, let's see if we can find a trend line. Looks like we're trading under it already. Yeah, we are trading under the trend line, and we are getting walked down by the 15-minute 8 with increasing bear volume towards the end of the day. Now, this is just a end of day pop. Overall, it is still a decreasing volume, but I am not seeing a wedge. I mean, depending on how you draw it, there could be a wedge. Let's give this one a try. So we are still holding this trend line. Yeah. Looks like we're going to be pinned in between these two trend lines for some time unless volume comes in. Key trend line to watch is this one, going back to January 21st. We are holding that lower trend line. Next is Nokia. Same idea as BlackBerry, clearly weaker than GME and AMC. Okay. Let's see if we've broken that. Nope. So we are in that support zone. We can see the last time we came down to the bottom of it, we had a small pop back up to the 15-minute 8. And from there, rejected, still getting walked down. Chart is not ideal for bulls. If we lose this lower zone of the support area, we will be looking at a gap fill down to 420-ish. That's another 10% move down. Okay, next, KOSS. I'm seeing a trend line, but there we go. Holding that lower trend line on the 15. There is potentially a wedge forming here. Excuse me, guys. Alright, so it looks like there is a 15-minute wedge forming. We are on the lower part of a wedge, lower trend line. RSI is cooling off, now heading towards below 50. Low risk entry, considering if we open around this area on Monday. Low risk entry, use that lower trend line as your guide if you are planning on going in for a bull play. Yeah. Actually, I'm gonna add one more to this WSB bets section, and that is SLV. And as you can see, most of these charts I have not reviewed before. They are either very clean or minimal drawings from dating way back. So good chance for you guys to see how my review goes in action. Perhaps you can adapt some of the strategies I use and some of the ways how I use tools. I'm not saying, of course, I'm not saying that the way I draw are the best, but it's been working for me. If you have other ways that's worked out for you before, please do share it. Happy to learn new things. And that's what the trading in the stock market is, right? There's constantly new things being brought to us, new strategies. Just find the thing that works for you. Anyways, so on SLV, we have broken bear on the lower trend line. No significant follow through. So that is good. If we're looking at a even shorter time frame, still broken bear. And here is your top trend line to watch. Likely to get walked down by this trend line until volume shows up. There has been no noticeable move yet. The only noticeable move was way back when we had this first pop. Look at this volume. If we were to zoom out, highest volume ever. Not ever, but highest volume in a long time, and that's bull. We can see previous high volumes are majority bears, so notable volume. Generally, we will see follow through based on this type of volume. What about on the daily? Okay, on the daily, this chart's a bit clearer. Seems like we might be forming a descending wedge. Or we broke bull on the descending wedge. Chart's a bit hard. This chart is a bit harder to draw on because of all the choppiness in it. All the gaps. Gap up, gap down, gap up, gap down. So this part looks a little bit, yeah, this would make a bit more sense. We were previously in a wedge, rejection here, support, rejection, gapped up but got shut down, and then support again, broke over, back test the trend line, and now, yeah, this may be a bit harder to draw. Key support, 23 bucks. Key resistance, 25.74. As long as we're pinned in this area, it's gonna be hard to find a trade. But looking at that daily volume back on Thursday, this has me thinking that we are going to be looking up higher. We'll be interested in this trade. We'll be scouting it on Monday. All right, that's it for WSB Wall Street bets. Next up, semiconductors. Clean chart. Open. I believe this is IPO. Oh, it's been a while. Okay, never mind. Breaking bear on our clear trend line. Potentially a huge rising wedge that was forming. Gonna have to see price action on Monday. Monday is crucial. We broke bear on Wednesday, Thursday. Friday we bought back up above the trend line. Yeah, I still think this is the key trend line. We're gonna want to see Monday get follow through, go past that 88. Not a very interesting chart in the sense that for bulls, I don't really see. I mean, you could use this as a low risk entry and just use the trend line as your stop. But other than that, even if you're looking at upside, there's not a whole lot. Let's say we're to go from here to the upside. Oh, that's still 19%. Okay, that's quite decent. Risk to reward is there right now, but overall, we're gonna need to see that volume. Look what happens on this what happened after this volume spike on the daily. It spiked, we went sideways, formed a bull flag, then we kept going, went sideways. Not sure what happened here, broke under, but got bought up again, and saw that follow through. Since the day of the volume pop, we saw follow through. So watch for the volume. There is nothing exciting on this chart as of yet. Next, NVDA. If you are trading NVDA, know that it is gonna continue to be frustrating until that volume comes in. Okay, ever since our move back here, this move that was walked up by this trend line, ever since this move, and we topped out. Yeah, we topped out here. Not even necessarily on volume climax. The drop showed a volume climax, but not on the way up. Then from there, it's just been decreasing volume, and now we are, well, technically it was decreasing volume here. Now volume is sort of just steady. Chart is going to continue to be a frustration if you're looking for that move. The wedge, the original wedge we were looking at, basically just went sideways. Had a fake out. Yeah, had a fake out breakdown today, or back here. Then we had a fake out breakout, then come back again. So kind of hard to read this chart right now. Just avoiding trading on it. There's a clear zone that we are trading in. This is your clear zone. Until that volume shows up, this is more so a no trade ticker right now. And earnings coming up end of February. Until we get closer to earnings, I don't imagine there's going to be anything exciting or news. So if news comes out, it could cause it to move. But as of now, it's no trade. AMD, same idea. A little bit weaker, quite a bit weaker. Trend line doesn't work. We were in the megaphone pattern. Let's clean the chart up here. Right, we were in the megaphone pattern. Resistance, support, resistance, didn't touch. Oh, that was a 0.38, so it makes sense we bounce from here. Double bottom, bounce up, met that resistance again. Down, support. Likely a fib from here to there. Rejected from the GP and came back down. Now we're breaking the previous support of 0.382 as well as the lower trend line. And we also broke the 0.5 fib retracement. Chart has been red for the previous 6 days in a row. Is very weak. I imagine in the future, anticipate a walk down by the daily 8. But we are approaching that oversold area. Nope, already did. So the bounce is happening soon. Bull divergence back here. Came back. Another bull divergence. Let's use that one actually. Slightly broke under, which formed a strong bull divergence. But bounce is a lot weaker than one would anticipate from this kind of bull divergence. So chart is extremely weak. 15-minute, 30-minute. Nope, just getting walked down by the 30-minute 8. Use that 30-minute 8 as your guide. Next, TSM. Sorry guys, I'm getting a lot of glare here. Alright, TSM. First time we had broken under the daily 8 ever since November 11th. So basically near that beginning of run of SPX. So bears are showing up. We can see bounce from the daily 8 ever since we broke over in November 11th. Bounce, bounce, support all the way, bounce again, and now we're broken under with a rejection from it. Low bull volume, chart is looking weak. Now we look for where are we going to retrace to. This run has been extremely strong. Ultimately, if you're looking at long term, always draw to the notable higher low. That'll be your first stop. Or if you're in a shorter time frame, look for that. So this will be the ultimate retracement that we're looking at. This will be the shorter time frame retracement. Following there's probably another one in between, but we're still looking at this one right now. Right now we are bouncing from 0.5. I don't think we have touched yet. Nope. Yeah, chart is very weak. From here we'll likely see a lot more bear volume. Makes sense to come visit the GP. There is a gap left in behind. So if we fill the GP, it will line up with this January 6th price action. Not interested in a trade on this ticker. Will be interested in it if we were to come back and test the GP, which would, depending on how fast we drop, would potentially line up with the previous trend line. We can see that this was resistance, broke over, support. So key trend line to watch right here, the upper trend line of this wedge. All right, that's it for semiconductor. Next is IPOs. And for some reason I don't have dash in here. All right, Airbnb. What a strong chart. What a strong chart. We were looking at this bull flag forming before. It popped a lot stronger. We saw that nice follow through. This bull flag formed and we came up to the 1-to-1 extension target. Now we form a chopstick top and rejecting from it, but we did close right on the daily 8. I'm thinking there's going to be a reversal from here, because if you look back here, we ran far from the 88, which gave us room and time to come back to visit that 88 in order to form a bull flag, which we did over the next 4 days. However, this time is a little bit different. We didn't run far enough. There is a chopstick top pattern, as well as 2 days later only, coming back to the 88, closing on it. It does not convince me for bull plays. However, there is decreasing bear volume. No bear divergences. We could very well just see a reversal right from here, go straight back up. Chart is extremely strong. One of my personal favorites will be looking at 4 entries. But let's take a look at where the resistances are. This one doesn't make sense. A key level 170. Resistance, support. Broke down under, went back tested 170. So 170 is a clear magnet. And there's a trend line that works. There it is. Okay. We nearly wicked from the GP. At the very minimum, I would imagine a retest or a bounce from the GP, but chart is looking weaker. So let's take a look at this from a whole run perspective. Now this is a huge pullback, so I would rather use the low from there. That doesn't seem to work. Alright, so remember guys, I said that use the previous lows. So the first one we're looking at is gonna be this one, from this low, higher low, to the higher high. So that GP has not been met yet, but based on, so then the next one you draw would be the next higher low, which is this one, and then you can draw one after as well, the next higher low, just depending on where the chart is and what your anticipation is for the bounce to begin. For me, I like to look for zones that has a lot of areas with inconfluence, which would present a much higher chance of reversal. So first one we're looking at, we haven't passed the GP yet. I'm anticipating that if we lose the 88, we will be losing the GP, because this magnetic zone of 170 needs a clear retest. We've had a retest here. Not too sure if that's a clear retest, because if you look at this, it's still in an uptrend. So if we were to look at the GP from down here where the trend line started, trend line, confluence, GP, confluence, previous resistance and support, confluence, 170. That is the magnetic zone. This price will be where I'm looking at my entry from. And it'll be an initial entry, but I'm not going to be playing smaller size on this one. I like this name. It is, I see a lot of potential with it for a long hold into 2022. We'll be eyeing this area, but make sure you pay attention to what the price action and volume looks like around this area. We're going to want to see a decreasing volume continue to decrease towards the zone, then a reversal. Okay, adding that to the list. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button so you can get updates on our new videos. Also, check out our website at totalcontroltraders.com. Stay safe and be in control. I will see you in our next video. Thanks for watching, guys.